Welcome back to the Eric Krown Crypto channel, wishing you a very happy and healthy start to this nice capitulation Thursday as we get ready for perhaps the big old move, the grand finale of this. And today's focus for this video is going to be specifically on the macro. Where essentially am I looking for some bottoming action, or at least what do these statistics and probabilities suggest are a good place to be looking for? So that's going to be the pure focus of today. We might address, potential bounce situations on some of the higher term timeframes, but ultimately I really want this to kind of stand the test of time. And of course, because we are coming at this from the 12th day of May, I do want to say that while the charts do essentially suggest some very clear and obvious statistics and probabilities about where to kind of be looking for the current time and being, that doesn't mean that things can't evolve over time after these sort of targets are very likely met. So with that in mind, let's get into it right now. I should also humbly request that if you do find this content valuable, if you just want to give back in a nice and free way, the best way to do that is simply just like the video. You can always dislike the video at the end if you happen to just really dislike it. Anyways, let's jump into it right now. And I want to start it off here with the log curve chart because something of great interest is happening right now. We are testing the long-term log bottom of this growth channel, essentially. And the reason why this is very significant is because there's really only been one other time that we've actually even seen wicks below that region in Bitcoin's history. So it would suggest that we are obviously meeting extremes right now, which I think is very obvious, right? We're not just seeing extremes on Bitcoin, but we're seeing extremes in the world market with, of course, the whole the whole monetary policy situation changed around. And in this case right here, we are already down around the bottom end of this. Now, of course, we can see major wicks below. In fact, even in March of 2020, we did see a wick that was below that lower end level of, more than 30%, which is significant, obviously. In fact, if we were to take the same sort of deviation from this current one, just kind of being aware of what is possible here, that would put Bitcoin into the upper teens, actually. Now, I'm not saying that is the most likely thing to happen from right here, but that is about the lowest price target that I can get reasonably based off of historical relevancy for right now. I do think that things likely try for a bottom a little bit higher than that. Again, doesn't mean that things can't redistribute from over there, but it would likely take some time. I don't think that this would all happen in one day, for example, or 1 week, although timing, not necessarily my forte, but ultimately, long-term on this log curve growth chart, we do see that this area is an area of hot interest, as it's going to show up many other times, as that number is technically speaking, pretty much where we're at right now, actually. Now, I do think that things very likely do go a bit lower, but ultimately this is of particular interest right here on a closing basis. On a closing basis, that is, you can really see that we've never had any opens and closures below that bottom end on the lowest side of that growth channel. Anyways, in this case, let's now take it one step further. I want to bring us back to this chart over here, and I want to put us onto a bi-weekly time frame. Speaking about the deviations that we do see from the green moving average, which is a green 55 exponential moving average, which we essentially look for, in terms of very violent and extreme price action. And as you'll likely see in the past, we've seen, a pretty standard deviation from that level, if we actually measure these out, consistent over the past, full history of Bitcoin. In this case, we saw this first deviation coming in back from 2014. That one led down for about 50% over the course of the next 28 days from the actual break of it to the next major macro low in this case. Again, things did even retest that region a few times later over the next 4 to 6 months. And it did take 4 to 6 months for really Bitcoin to kind of work its way out of that, out of that reaccumulation zone. But ultimately, that was of significant interest right there. Same thing in 2000, or very close to what we saw in 2018 right here as well. A little bit less, as we do expect the deviations over time to be less and less on a maturing asset. And in this case, it was about 5% less at about 46% right here. Again, about 28 days from the break to the next major macro low. Again, it took about 3 months from there to Bitcoin to reaccumulate and put in a nice rally. And then again, we saw the same thing in, of course, March 2020. This one happened pretty much all in the same go. You could say that it took about 14 days from the break to the actual low. It's a little bit of a nuance right there. And again, a little bit lower on that as well, being that it was rather close in time proximity to the 2018-2019 low right here. But again, about 45%. And so we could kind of make a nice relationship between all of these and say that, hey, over time, likely to reduce. And where would that put Bitcoin at right here? Again, this is going to be one of my lower ends that I'd kind of be looking for on a closing basis, very specifically. And that would suggest, let's say like 40%, kind of measuring this one out. That would be about low $20,000 territory. So between about $19,000 to $21,000 on the most extreme wicks, it's kind of where I would be looking for at minimum for a nice bounce. Obviously, that is Bitcoin's prior all-time high from the 2017 cycle. And, likely to bounce around there. Not necessarily, I wouldn't just blindly call this has to be the macro low, but extremely likely, extremely high probability to bounce at minimum. Anyways, taking this a couple steps further, now let's move on into my favorite chart, the one chart to rule them all, the one chart to find them, the one chart to bind them, and in the darkness, grind them. Doesn't even make fucking sense. Doesn't matter, man. Anyways, this is the 5-day chart, the 5-day volatility versus momentum chart. This one's still going. This one has been perhaps the most important chart alongside the daily volatility versus momentum chart that we are looking at for the past couple weeks. That one's already played out, and now we have this one to look forward to. Anyways, to explain this, we're looking at the BBWP indicator. This is a volatility-based indicator, and basically, and it puts it into a percentile format as I get a bunch of alerts over here. What the fuck? Anyways, before I was so rudely interrupted by myself, we do see that anytime it is in the teen-digit percentiles, the expansion phase from those extreme lows over the past couple years, and yes, we can go even further back than this, has led to an average move of about 45%. I would argue, however, that because this current iteration started in March, April, has been on these lows for longer than all of these past ones, we probably do expect on the upper end of that average, which has seen even almost up to about 50, or I guess the biggest one was, almost 50%. That was your Dumpola party from nearly a year ago in May of last year. Anyways, in this case right here, we have also used the 5-day stochastic momentum to get the correct direction on this. It's actually been perfect over the past couple of years. Again, you can backtest this even further than that. It's not always gonna be perfect, but not only do we have a trendline regression test and rejection on this particular tick over here, which is where we really start to get very bearish on this price action. We do see that downside pressure is gonna resume as long as Bitcoin's below $37,000. So until we do see the 5-day start to close above the stochastic momentum pivot, I would not feel comfortable at all whatsoever calling certainly no macro lows, but even just like a nice higher term time frame bounce, a big bounce, probably like 10% or more if I had to guess. But ultimately, that number will very naturally move down significantly on the next closure, and the closure after that, I imagine as well. But for right now, it's back in the bearish control zone, and unlikely to flip anytime soon as far as I'm concerned. And because we do have an average move of about 45%, and again, I do kind of expect this to be a little bit more on the upper end of that, we can look at the expansion point over here. That's the green vertical bar. And if we were to measure that out about 45%, that puts Bitcoin at about $24,000. I do want to redo this just to see what it would look like if we were to, move closer to 50%, or I guess I could just do mental math, but that would put Bitcoin at the low $20,000 territory. So again, does Bitcoin wick down to like 20 to 21,000 bucks and then maybe close somewhere in the mid 20s? Definitely possible, but ultimately these are zones on the macro scale that I'm kind of looking at as at least very, very likely bounce regions. If Bitcoin starts to fail those, then you got bigger problems than really anything else as far as I'm concerned. Anyways, with that in mind, let's now move it on to the next chart. Over here, this is the secondary chart, another chart that we've been hammering on for a while now, ever since we got the monthly MACD cross the downside. There are 3 components of this chart: the monthly MACD, the monthly PMAR, although less important, and then the monthly 20 simple. This is the first part that kind of allows the other ones to be initiated, if you will. And anytime that we have seen the monthly MACD cross the downside, well, there's been a very consistent response on price action. I've highlighted these 3 areas over the course of Bitcoin's full history with these green vertical bars right here. Obviously, we're working on number 4 right now. And in this case, that combined with the PMARP losing the moving average, although that happened like a long, long time ago, so that ship has sailed. But the next piece is rather important for the timing of this, and that would be after the monthly MACD crosses the downside, when Bitcoin closes its next monthly below that white moving average, which is a 20 simple moving average. That essentially catalyzes the move, historically speaking, all the way down at minimum to the green 55 exponential. Yes, we've seen plenty of wicks lower, but typically Bitcoin kind of finds its lows around that region. In this case, took about 1, 2, 3, 4 months to find its lows. Again, even grounded those lows out about half a year later, but ultimately that was the macro low. And then, of course, same thing over here in 2018. Monthly MACD crossed to the downside. We get the closure below the 20 simple and dumpola party on my face. 1, 2, 3 months and the low was found, and then another 3 months and in a nice little rally. Of course, March 2020, the old Rona, we do see a major wick below. This was a bit more on the black swan scale, I would say. And this one happened obviously a lot more fast, and thus the recovery was faster as well, but ultimately same sort of an idea. And yeah, we can get wicks like that, definitely possible. We just want to see kind of Bitcoin on a closing basis for the monthly find its footing around there, within a reasonable amount. I would say really no lower than a monthly closure below like $20,000, for example. In this case right here, well, we already got the monthly MACD cross the downside. We lost the PMARP before that actually, and we closed below that white 20 simple at the end of April, which was a big, another big sort of initiation thing on this channel that we've been focusing on, saying that, hey, things likely to come down here, or at least a lot more likely than they are to go up in this case. And where is the green 55? That is $24,500. Again, I look at this on a closing basis. We can certainly get a wick a little bit lower, perhaps down around the backfill of the macro breakout in December 2020, which is about $20,000. But ultimately, I really don't want to see Bitcoin close too far below that on a monthly. We have seen it before, it's happened over here, but not anything like super egregious in this case. So ultimately, that's kind of what I'd be looking for. Again, if Bitcoin's going to, find its footing within that region and reaccumulate, which is going to take some time anyways, even if Bitcoin doesn't put in a macro bottom here, it's likely to, bounce around, redistribute, and then move lower if that's going to happen at all. And by the same token, if it moves to the upside, well, it's still likely to reaccumulate for a long time. Typically, your accumulations are in equal severity to the volatility severity that we're seeing right here. It's a pretty massive move. I mean, this is a pretty big move. Even for me, and I'm sure many other people who've been around here for a while as well. This is, these are, in my opinion, in my humble opinion, very fun times and very opportunistic times, but I do understand for a lot of people out there, it is also, difficult as well, which I sympathize with. Other than that, the next piece that I'd like to bring up would be this chart back here. A different look on this one. But I would like to get a more well-rounded look. So let me put on the yellow 21. What we're going to do is we're going to look at the iterations of Silver Cross. Oh, by the way, I forgot to mention this as well. Let me just get rid of this for a second. We have a 618 Fibonacci retracement from the ultimate high to the ultimate low of this cycle and the past cycle. And the 618 is around that $25,000 region as well. Again, we're looking at closing bases, but getting closer and closer, and aligns with a lot of the other things that we looked at as well. All right, cool. Let's put this baby, or it doesn't really matter, but well, we would like to see this anyways. My point is that what we're looking at right here is a yellow and a green moving average. The yellow is a 21 exponential. The green is a 55 exponential. When they cross, it is called the silver cross. And it's honestly, I think it's way better than a fucking death cross or golden cross. I think that's mostly bullshit. Although, death cross players, they're probably rather happy right now as well. But I think you'd be just as happy playing this one, and probably more opportunist, or you'd be doing better opportunity cost, basically, is what I'm trying to say. Anyways, we've seen this cross happen to the downside a few times in Bitcoin's history, 4 times to be exact, counting the current iteration that we have going on. And the move from that, basically from that cross, has been rather consistent as well. Starting back on over here in 2014, right? We got the silver cross to the downside, next rally up to the 55 gets rejected, and about 63.62% from that high to the next major macro low over the course of 63 days does occur. Over here, we do see the same thing in 2018, but different percentage points. In this case, about 10% less severity. Again, I kind of would expect this, or I think philosophically you should expect this on assets that are, maturing over time. And this one takes about 54.5% done over the course of 56 days from that last attempt at a rally towards those moving averages, rejection, and down we go. This one over here, again, Rona dump. We do see, the cross happen after the dump. Again, when we have a black swan event like that, it's not gonna get them well. But still, the percentage drawdown from the big break to the next major low, very much in alignment with the past few ones as well, about 51.25%. So again, just kind of playing around with numbers here from that last rejection high to where we're currently at. If we were to say, 45% is relevant, or even 40% is relevant, that puts Bitcoin at about $24,500. If we say, closer to like 45% is relevant, because again, maturing over time puts Bitcoin more around like 23, 50% puts Bitcoin at about, 21 or so. So I do kind of like this area in general for at least a bit of a bounce, at least a bit of a corrective bounce. This move has been pretty damn aggressive, like I said, but maybe that's just me. Maybe that's just me. Anyways, we are 14 minutes into this video. I want to go over now just one last little thing. This is going to... this is basically the only thing that I'd be looking for to kind of denote the next daily bounce for Bitcoin. This is kind of what I was posturing yesterday's analysis on, and the day before that, saying that a bounce is possible, confirmed by either an hourly closure above, I think it was whatever the top side of the range was yesterday, which didn't fucking happen, obviously. It was like 32.6, with targets up towards the mid 30s if that were to happen, or if the daily stochastic momentum crossed the upside. Obviously that did not happen. That was it didn't just not happen. It continued very heavily to the downside right here. Now the daily momentum pivot is at $28,000. So if Bitcoin could close a daily above there, probably would be looking for, a corrective bounce. Again, corrective bounce, not the same thing as calling a low. I do think that we probably washed this one out first before putting in like any sort of like a major bounce, if you will, like a very, very impressive bounce, a tradable bounce, with conviction. Anyways, other than that, I think that's a good place for me to kind of leave off on this video. I guess I'll shill my Instagram while I'm at the end here. Please understand there's a bunch of scammers on Instagram. I'm not them. The only Instagram account that I have is in the link description below. Any other account is a scammer that is trying to get you to trade like some secret fund, which again, I do not have. I certainly have my hands full trading my own accounts, especially during weeks like this. This is, really where most of the work gets done. What else? Bybit, yep, should do the old Bybit chill as well. There is a link in the description below for Bybit, which gives you some sort of a deposit bonus. Understand that when it comes to leverage trading exchanges, especially during times like this, very unwise to be trading there unless you already have some sort of a working strategy, that you have back tested and forwards tested without risking financial equity, which you can do on, of course, a testnet account, which Bybit does have, which I'm very supportive of. That's awesome. That's amazing. Or even just pen and paper, or we even have that for free on the Krown trading application over here as well. But other than that, I think that's a good place for me to leave off. Keep those areas in mind. Again, I'm not saying that things absolutely have to bottom there, but likely we see at least some bouncy activity. And from there, we'll kind of judge, is this accumulating and this is the actual macro low, or is this redistributing it? And we should get ready for not just fucking Wreck City, but Goblin Town, well into the mid, maybe even low teens. But for right now, that is, statistically speaking, what I think is most relevant. So hopefully that was helpful. And there you go for Bitcoin, sirs and zers.